Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said millionaires don't need astrologers, but billionaires do. And so we begin. It's Thursday, June 27th, 2024. Today's episode will start with initial jobless claims coming in lower than expected. This goes against my overall thesis that things are slowing down. However, one thing that supports that narrative is the continuing jobless claims cracking higher. From tradingeconomics.com, United States continuing jobless claims, today we had a release of this information for the week of June 15th being 1.84 thousand, which hasn't been seen. This has been the highest level since 2021. This is one of those, another leading indicator that can detect recessions. The gray bars in this chart from Fred continuing claims shows when we have recessions, continuing claims spikes upwards. Are we seeing a spike? Not yet. But the fact that we see higher levels right now that haven't been seen since 2021 might give an indication that we may be headed in that direction. Third Robschild headline, Bitcoin and HYT and more coiling up before tomorrow's big PCE data drop. Don't forget, tomorrow, Friday, the Fed favorite inflation gauge, PCE. If this data comes in much cooler than expected, we can expect the markets to start pricing in stronger chances of earlier cuts. As is expected, a lot of markets are preparing for the news to come out, Buy the rumor, sell the dip. Well, not the dip, sell the news, sorry. Buy the rumor, sell the news. The news hasn't come out yet. So, Bitcoin here, this is a minute chart, by the way. This is not something to get too excited over, but I find it interesting that all day today on Thursday, we have been just coiling, preparing for a bigger move. Will it go up or down? I believe we are headed down, but we'll see about that. A daily chart of HYT, high yield corporate. Some people call this smart money. I call it the dumbest of the smartest money. This is guaranteed payments, bonds, preferred shares. There's a lot of big boys playing in this market, and we have been very interestingly, in my opinion, coiling up for a substantial amount of time. I would suggest since the beginning of 2024. And if we zoom out on this chart a little bit, and when I say a little bit, I mean a lot, it doesn't often go sideways for very long. This is a weekly chart, as you can see, from January 2024 all the way through today in June. We have been going basically flat, while in the past this generally likes to go down, it likes to go up, it likes to go down. It doesn't love to go sideways, but the longer that it does go sideways, the higher the expectation you can have of a larger break, whether it be to the upside or to the downside. I believe that with the Fed having been literally strangling the economy for a long time now, it is fairly inevitable for this market to break to the downside. But again, we'll see. I do see in my crystal ball potentially the PCE data tomorrow being the one that, the straw that breaks the camel's back, or so to speak. SPX, the S&P 500, if you've been following the show, you know that over the past 4 or 5 trading days, I said it looks like it wants to go sideways. It's been doing exactly that. Waiting for this PCE data. This really could crack things in one way or the other. Or, again, as we've seen many times, the markets prepare for something crazy to happen, and then nothing happens, and then we continue sideways to wait for something else, some other news to start sending things going a certain direction. But when I see in my crystal ball, I think tomorrow might be a fairly eventful moment for markets. If you combine all of the charts we've looked at so far, with the coiling going sideways, it seems like we're ready for a breakout of sorts. To add to this narrative, XHB, the housing index, we have been coiling really since February 2024. There's months of just going up and down, really forming a fairly clear wedge here since February. If you take a look at it like this, we've been getting tighter and tighter and tighter within a range, and the longer you go sideways, typically the larger the breakout. Is this it? Are we ready for a major breakdown, a major break to the upside? I believe we're headed into a recession. I believe we're headed downwards, but we will see. Tomorrow really could be a historic event. But don't count your eggs before they hatch. Fear and Greed Index from CNN. Finally, we have resolved from staying in fear for quite a few trading days to going back to neutral, as is expected before a major data release such as PCE data. Moving on to TLT. A small bounce. Again, we're within this channel. I'm only sharing this. It's not of that much interest other than I strongly believe that this is, again, no investment advice, but I do believe at this current time this is one of the most intelligent investments that you can be in. I think that yields on treasuries have gone too far the wrong direction, and considering demographics, where we are in the business cycle, I believe this is pretty destined to move up in price significantly. I have 50% of my own portfolio sitting in this, basically this fund. I had a little bit more leveraged, basically. I do personally believe, with my crystal ball and all, that tomorrow may be the day where we see, sorry for the reload, where we see this crack higher and potentially get above this black line, which represents a longer term inverse head and shoulders on TLT. And for me, that would be fantastic. But like Gareth always says, don't tell charts what to do, let the charts tell you what to do. You know, but well, the problem is he also says nobody has a crystal ball. But you know, yesterday, Uranium, I had noted how the past 2 days we had sort of, we've broken down out of a pretty long-term trend line, and I thought this was destined to head lower. However, you know, by charting techniques, you kind of need to close below this tail here to confirm a breakdown, and we broke right back above this line here, so I found that to be interesting. The way I see it is that maybe this has to do with PCE data, and it's just sort of like resuming to more of a neutral position before it can decide to break down further or not. EWZ, Brazilian equities. This is a long overdue underinvested market with in my opinion, a ridiculously low PE ratio compared to the rest of the markets. I think it's a great place as far as equity exposure goes. I only bring this up today because I saw it cracking through many trend lines that go back a very, very long time, as far back as 2011, and I was wondering, you know, when are we going to see a bottom here? So as it is right now, to my eye, it looks like we potentially have a bottom forming here. Again, this is a little bit hopeful, but you know, it just again, I'm not a trader. I don't use technicals to support. I don't use macro data to support my technical data. I use technical data to support my macro data. I look at the valuations of companies, of countries. I try to look at the bigger picture as to what's going on. I spend a lot of time staring into my crystal ball, and you know, even if the thing is with me is that even if Brazilian equities continue to lose value here, I will attribute it to Mr. Market, in the words of Graham, as being a little too crazy here, and it clearly has more value than what's priced. And so I'm happy to hold this no matter how low it gets. This is an entire index. This is an entire country of companies. Yes, there's political risk, but not so much political risk that we need to consider these companies worthless. As it is, there's large dividend payments, relatively speaking. And anyway, I digress. I've been mentioning wood, the price of wood, the ETF wood, and how it seems like we had a double top and a breakdown yesterday. Today, I consider this to be a retest of this previous line, and we held. What will really confirm this pattern is if we get a close below the bottom tail of the candle that cracked through. So you look at what candle cracked it. It was this one on June 26th. How low did it go? 77.07. So if we're able to close below this line, that can give confirmation that wood is headed lower, and as one of my as a pretty good leading indicator, it could show where things are headed generally. Last chart for today, SMH semiconductor ETF. I only wanted to add this to add to the point that we are coiling up here waiting for a bigger move. Will this break back out to the upside or to the downside? More likely, on a chart pattern basis, it's more of a bear flag, which should break down to the downside. But again, we need to see what the PC data says and how it affects markets. Mostly how it affects markets. It's really crazy how people think that a really hot reading can send things one way and a cold reading can send things the other way. But if it's too cold or it's too hot, it's like, you'll know by the market open tomorrow at 9:30. The data comes out at 8:30. 9:30, it should be fairly evident how markets are interpreting the data coming out. And that's all I have for you for today's show. Hope you enjoyed. Thank you for watching. Robschild.